All right. Hello, everyone. Welcome to the HODLCast. Today is March 13th, and we have very special guest, Teddy Fusaro, the COO of Bitwise Investments. Teddy, thank you so much for coming on today. I heard your recent podcast with Frank Shapiro, and you just had so much great information shared there about the state of the state of the markets, basically. And a lot has happened just since that podcast. So I'm really looking forward to getting your take on where we are with things. You said in an email, we have a three-headed monster going on right now. So maybe we could get started. I think everyone probably already knows who you are, but maybe just give a little bio, and then we can kind of get into what's going on in the economy.
Yeah, thank you for having me back, Sasha. It's great to see you again and be back on the HODLCast. I love being on the first time, so happy to be here again. And it is Friday the 13th, which is which is something. And as you hinted at, wish the circumstances were better. I think right now it's a unique time in the country and in the world. Really, we're going through something that we haven't really been through before. But before jumping in, like you said, yeah, my name is Teddy. I'm the Chief Operating Officer at Bitwise Asset Management. We're a cryptocurrency and digital asset focused startup. We're headquartered in San Francisco. I'm here from Connecticut today. Luckily, we implemented a firm-wide work from home policy on Monday this past week. So all of our people are working from home. They're safe where they are and with their families. So we're happy to get that done earlier in the week. And at Bitwise, we create investment products so that people who may not be sophisticated in terms of accessing the cryptocurrency market directly themselves can access it through more traditional investment wrappers. And we also do a lot of research, as you know, and we educate our clients, potential clients, institutions, and even regulators to the extent that we're trying to get additional things done. We provide that research in those contexts. So it's a lot of what we do as you're aware. And that's the 30 seconds on who I am.
And that's why I'm so excited to talk to you about this. Your Bitwise research has been second to none. Like that report that came out last year looking at the various exchanges and the regulation and how it impacted the truthfulness of the numbers coming out of there. I think that was a really groundbreaking thing for the industry to see. Lots of people had, doubts of the numbers that were coming out, but you guys just drilled down and showed how clearly, like what a difference there was between the top 10 exchanges and the other, 150 out there. So what has your research been showing you this week? Maybe we can just start with, the coronavirus is kind of the main thing, but Bitcoin itself dumped a lot of assets or a lot of value yesterday. And I maybe naively always kind of thought Bitcoin would act as a safe haven when this next financial recession was going to come. And so I was really disappointed and surprised and kind of a little panicking myself when I saw it dropping so much yesterday. My husband started calling our lender trying to get $50K out of our house. That was his response to it, but he wanted to buy as much as we could at the moment. But yeah, what do you think caused that big crash yesterday?
Yeah, there's so much going on holistically in financial markets, and it's all really intertwined. And I think that many people don't consider the fact that part of Bitcoin's maturing, and it hasn't matured yet, but part of Bitcoin's maturing is entering into an institutional world where it becomes more interconnected with the rest of the system. And that's part of what we saw last night. And I'll talk maybe just a little bit more about other dynamics before I jump into the Bitcoin dynamics. Sure. To kind of connect it together. Part of the problem, you said, as we talked about over email, is that right now we're dealing with a black swan event in the world, something that we just haven't dealt with before. We're in the middle of a financial crisis already. We're going to be very shortly, within the next 5 to 10 days, in the middle of a public health crisis. And then we're also likely at the very beginning of an economic crisis. So we have these three things that are happening at the same time. And the reality is that we haven't been in a situation like this in maybe 100 years. People are often looking to pattern match the last crisis onto the next crisis. And you'll hear people say, this isn't 2008. And it's not 2008. It's different. And in some ways it's scarier. In some ways it's more dangerous. And it means that the crises are going to manifest themselves differently, and we need to use different policy tools to try to combat them. That's part of the backdrop in the global ecosystem. So there's three different things that people need to think about. There's the most dire and urgent, which is the public health issue that we're dealing with, that you and I have talked about a little bit offline. That, to me, is the most important one. It's the most acute one, because the reality is it's going to affect many people that you and I know and love are likely to be in severe, dire straits because of their health. And America is just still today is not prepared for it yet. So that's the first problem that we have to deal with. It's going to spill over very clearly into the economy. When I talk about the economy, it's that, like, all of the things that people normally do on a daily basis worldwide have ceased to happen the same way that they used to, right? Like, the engine of the world's economy, which has been China for a long time, from a manufacturing standpoint, was basically closed for more than 6 weeks. And then as the health crisis spread across the world, everywhere it gets to, the economy there has the same issue. And it takes a little bit of time before people understand the economic consequences. It takes a little while for that data to really get processed. And you think about large-scale economic data doesn't come out for about a month or so after it happens. So we haven't really seen much of precisely how severe the economic contraction is going to be. But this is not going to be like a garden variety recession from an economic perspective. It's like, think about things just ceasing to function the way they used to, right? What happened yesterday? We canceled the NBA, canceled the NCAA tournament, the NHL canceled it, golf tournaments are canceled. We're canceling schools in Connecticut yesterday, at least where we are, our local township canceled schools. So, like, that is going to have a very severe impact on the economy that many people haven't confronted yet. And then the third thing, like it says, three-headed monster, because the third thing is the financial system. The financial system does tend to react quickly, more quickly than the economy can be reacted to. And that's what we're seeing this past week in particular, is a severe reaction to people understanding the gravity of the situation, which is why yesterday was the worst stock market day since 1987. We're seeing more severe signs of strain and crisis in the fixed income market. And I can talk a little bit more about all these things, Sasha. But in the fixed income market, it's not as visible to people. People tend to look at their 401k, or they look at their investment, their brokerage, and they see the ups and downs of the stock market. The fixed income market is much larger. The treasury market had real signs of stress yesterday and again this morning. And then it's really against that backdrop that Bitcoin is a casualty. So, like, to give you a little sense of how something might spill over into the Bitcoin market, if you're a hedge fund manager and I'm your risk manager, we work together, but I say, Sasha, I'm the one who decides how much risk you can take and when. You do whatever you want. And you're running, I don't know, just call it, to keep things simple, we'll say you're running $100 worth of risk. And you have 60% equities and some illiquid investments, like 38% of your portfolio, and then 2% of your portfolio is in Bitcoin. Very volatile. It's getting bunched into that risk asset portfolio along with the equities, right? Mm-hmm. On Sunday, this past Sunday, when Bitcoin really first took an aggressive leg down, during the day before the global public futures markets opened, if I told you to come into work on Sunday and I said, Sasha, what you're doing with your portfolio when the market's open is you're reducing risk, guess what? You're selling that Bitcoin too. And that's the beginning of what happened here and the beginning of the cycle in markets that's happening with all risk assets. And then what happened last night was what I would characterize as a very technical market microstructure related cascade of sell orders being triggered as things got worse into what was a very structural, sharp sell-off that included some of the large offshore futures exchanges for Bitcoin.
That's a great explanation, Teddy. Thank you. So how many hedge fund managers are there holding Bitcoin, do you think?
It's really hard to say. We don't know the answer, but when you look at, you hear about people talking about institutional adoption of Bitcoin, it's not all good, right? Growing up is hard. So we don't know the answer, but if you look at things like the growth of the CME futures market, the regulated futures market, which Bitwise has argued is one of the most important markets in the world, the growth of open interest on that platform and the growth in volume there has been massive over the last 2 years. And that's an indication of institutions using the futures to trade and take exposure and hedge. So you can assume from that data that institutions have increased overall their exposure to the asset. And we think that that's a significant part of what has occurred to Bitcoin over the last week. We don't think that what I'll call the long-term thesis or the fundamental argument related to what Bitcoin is and what Bitcoin can do is tarnished as a result of this week's activity. We still think it's intact, but I think it's important for people to realize that there's an expression that is in a panic, all correlations go to one, meaning everything starts to trade together, and that's what happened this week.
Mm-hmm. Yeah, and so with the hedge funds, if they were told by their risk managers to take risk off, how conservative are the managers before they start putting risk back on?
Yeah, it's hard to say. I mean, one theory would be that once they leave, do they come back? How long does it take for them to come back? Do you want them back? Have we, quote unquote, shaken out the weak hands who are participating in the market? Now we have a stronger base to rally from. It's so hard to say. I think with the Bitcoin market and with the equity markets and with the economy and with the public health crisis that we're going to have, it's really difficult to pin down when this will turn around. And I think that's one of the challenging things about the economic issue, that most of the people that are still deluding themselves about how serious the situation is, the economy is not like a car that you can turn on and then turn off and turn back on. It's very difficult for it to reemerge from a standstill. And that's why what we're going to see, and we'll talk about some of the long-term dynamics related to Bitcoin, but that's why what we're going to see massive amounts of monetary stimulus from the Federal Reserve. We already saw two instances this week where the Fed had to step in on an emergency basis to help provide liquidity to the Treasury market. That's after, on Monday, they already cut interest rates once, emergency rate cut. Very rare activity to see happening from the central bank. So we already had an emergency rate cut once, meaning they reduced the overnight rate. Then they stepped in yesterday when Treasury markets were having a hard time functioning to announce a new repo program, which means they're buying treasuries from the market and printing new money. And then today, they had to increase the size of some of those asset purchase facilities, or repo facilities as they call them, in order to support the market. So that's just the monetary side, and that's going to expand massively. So the Fed's balance sheet is going to have to expand as they spend more money to support the market. And then we're also going to see fiscal policy, so government spending that is going to have to, what will eventually be branded as bailouts. Industries are going to need bailouts very badly. Imagine the airline industry, Sasha. You see pictures on the internet, right? You see pictures on Twitter. I'm not flying anymore. I typically fly 3 times a month.
I flew last week from Florida, and it was empty. Even I went there on Tuesday, came back on Saturday, and both times, I had my mom was with me, so we sat with one seat in between us, but we could have easily had the whole row to ourselves. And it made me think, what am I doing flying here? But anyway, we were.
Yeah. How empty was the plane? Was it partially, were there entirely empty rows?
Oh yeah. There were about 20 people on my flight home. Yeah.
Wow.
Mm-hmm.
See, I mean, and it doesn't, like, I'm not an economist, but it doesn't take a statistical analysis of the data coming in to tell you that an airline that usually has that plane full, right? Your mom lives down there, or your dad, is it?
Well, my dad had a mini surgery, so we went down just to visit him and my sister.
So you take that flight fairly regularly, right? A couple times a year?
Mm-hmm.
And what is it the rest of the time? It's usually full, right?
Usually in a middle row crammed between two people. Yeah.
Yeah. So like it doesn't, this is why it's hard to you think about, it takes people a long time for some reason. And we've seen it actually with the onset of the virus. And I wanted to talk about this a little bit too, but it can take people a long time to sort of deal with the reality of a situation if they don't like what the reality is.
Mm-hmm.
Right. And you don't need to wait for the data to come out to tell you that the airline that operates that flight that you take to Florida and back to DC area is going to have serious trouble funding their business, because that's happening every day. They're used to having that flight full every single day. So I think that as soon as this weekend, we might start seeing things like bailouts for airlines and hotels.
And all the staff that, I saw some airlines are just laying people off, and there's going to be a lot of people losing money on it. But it seems like for America anyway, Trump has made a commitment to try and give the individuals money so that while they're homesick or caring for loved ones that are sick, they won't experience an interruption in their monthly income. Do you think that will actually happen though, or was it just a empty promise?
I hope that we can get something done like that, and I do think that eventually we will get something done. But the part of the challenge here, and you'll start to see markets react to the discussion coming out of Capitol Hill and the White House, and we already have very, very, very sharp reactions to what they hear about what's getting done on the fiscal side. I really hope that what you suggested gets done. But what happens is, inevitably, and in the political environment we have now, even more so, but inevitably getting the fiscal package from the White House and through Congress becomes a political issue. And so one side will put things into the bill that the other side doesn't want, or they'll try to tack on funding to something that the other side doesn't want funding attached to, and there'll be a fight. We saw this movie. The sad thing is about this, Sasha, we saw this movie over and again during the great financial crisis in 2008. You probably remember it, but what the market needs to see, and the market will tell you, is that the federal government is going to step in to help the economy. And the people who are going to need the most help are going to be those people that you're talking about. Like, the headline we see is that the NBA got canceled. But you want to know what the saddest thing about that is? What about the people who work in the stands?
Yeah.
Right? What about the people who work in the concession stands? What about the people who work in the parking lot?
Mm-hmm.
Those people oftentimes, given if you just stratify based on how much money they're making, those people oftentimes, they can't afford to not go to work.
And they're often not on a salary either. They're hired out by contractors who will just say, oh, you're not working, we're not paying. So then they're stuck, 2 weeks or however long the MBA's canceled without a job. And
precisely,
where to find a new job in the service industry right now? Nowhere.
Precisely. And that's why it's so important that the fiscal package that we get done doesn't just go to companies and corporates and businesses. Companies and corporates and businesses are going to need help. Don't get me wrong. They're going to need help, particularly in the hardest hit industries. But we need to figure out a way, and we should all be hoping and calling on our elected officials to make sure that they find a way to support the people who need the help the most. And the other thing that's really difficult, there's school cancellations, for example, are the right thing to do to slow the spread of the virus. But the thing that's really hard is, again, it's those who are the least fortunate, or those who are the least wealthy, who oftentimes can't afford to not go to work, to take care of the kids who now don't go to school. Mm-hmm. And that's why I say that this is unique. Like you typically have different policy tools to respond to different types of crises, right? Different crises. This is like all of the above at once.
Yeah. And then the reason, so I had texted you that it's maybe a little off topic, but that my husband bought a gun yesterday for the first time. And the reason that we did that was because we were in the Bitcoin chats hearing a lot of people surmising that there will be looting when the stores run out of food. And we're all, if we end up all on quarantine with the US Marshals standing outside with guns and saying, only one person, how they did in China, only one person can go to the store a day, and there's only limited things at the store, that's when prices really rise, and fear and all this tension, and it could disrupt into some kind of civil unrest. Hopefully not, but that's another fear I think out there.
I think that events like these force people to consider what the tail risks are, right? Mm-hmm. Is it likely to happen? Gosh, we all hope not.
I hope we'll just be sharing our supplies and that there's no shortage, but the thought of like, oh God, do we need to protect ourselves to that degree? Yeah. I hope, anyway, yeah.
But this is what these types of events force people to consider what that looks like. And think about what happened in Iran. Iran, who unfortunately, has if you had to choose, we've seen massive outbreaks in China, South Korea, Italy, Iran, now the United States and Europe, and it's spreading around the world. Of the countries that have handled it the most incompetently, it's been Iran has been the worst, right? Which is not surprising. They have enough.
Their leader is dead.
Sorry?
Since their leader is dead from the virus, there's leadership there and a lot of fear and panic probably.
Yes. So the thing that you look at there is that's an incompetent response from the government, right? And they've done all the things that you don't want to do in response to a crisis like this. No transparency, no testing, not telling people the truth about the numbers, not educating people, unable to quarantine areas because people didn't know how severe the risk is. And if you check down the list and you're honest with the assessment of how we're doing versus that, it doesn't look great. It doesn't look great. Now, we've started to turn that around a lot this week. I think that yesterday was a turning point in terms of people understanding the severity. So like even you and I were talking a little bit before we went on air about how the stress and the anxiety is can be almost worse than the virus for younger, healthy people. If you're stressing out, you can't focus, you can't get your work done. And I think that's true. The flip side of that is the increase in awareness causes people to do the types of things that can slow the spread. Mm-hmm. And so I think that yesterday was a turning point. Commissioner Adam Silver of the NBA canceling the season or suspending the season, I think that says to a lot of people who weren't otherwise paying attention, oh, maybe we should really pay attention to this, right? And so I think that yesterday's a turning point. And then just to circle back to the social unrest that we talked about, that is the tail risk, right? That is one of the tail risks. In Iran, the point I was going to conclude on is that earlier this week, they released 70,000 prisoners from jails, because once the virus gets into a jail, there's no stopping it, right? People often live in the worst types of conditions where they're sharing facilities, bathrooms, showers, places that they eat. Healthcare is poor already. There's no type of healthcare that you'd have in a functioning market outside of a prison. So when you consider that that's what's happening in Iran, what do those 70,000 prisoners do? How do they get tracked? Do they go back to jail afterwards? It's unclear, but it shows you that a virus that is spreading quickly, causing a severe tax on the healthcare system, and then causing an economic shock and a financial shock. If you start to think about all of the related impacts that can have, there are a lot of things that that you would consider.
But do you think we might still be overreacting because of the media? And I've gone back and forth on this. All along, I thought we might be overreacting. And then for 2 days, I thought, oh my God, we're not doing enough. And then, so I don't know what the answer is. But if it's really only, so with SARS I think with SARS, we had 1% of the people who contracted it dying. And with this, it looks like we have 2%. So it's double the death rate of SARS, but it's still only 2% of the people who contract it. And I've seen numbers where it's more like 14% for the older population. But if you look at, we've been comparing the flu numbers to these numbers and noticing that there's a lot more deaths from the flu. Or if you look at driving down the highway and people dying on the road, people dying of diarrhea, that was brought up, from the toilet paper comparison, but there's more serious or higher death rate things happening that don't cause us to shut the whole economy down. So why this one? Why are we reacting like this? Why do we care so much about these deaths, I guess, is the question on a lot of people's mind.
Yeah, it's an important question. Why do we care so much about this, and why is this one different? Here's the reason. I just rearranging my screen so I could pull up some statistics in front of me, and I would encourage everyone to look hard at the numbers in Italy. Maybe I could send some to you, or it's
yeah. I can actually screen share for you if you want.
No, it's a little messy, so I don't think it'll look great on the screen. Okay. But the problem is with this virus is we don't understand it very well because it's so new, right? It literally emerged in humanity and in the last days of 2019. But there are certain things that we do know about it. And here are the things that we know that make it so concerning. It spreads very rapidly. It's very contagious. That's one. Two is that a high number of people who contract it need to go into intensive care in a hospital setting, right? And it's because of those two factors. Here's the real risk. Here's what happens in every area that we've seen it. The healthcare system simply gets overrun. The healthcare system, like what happens to a healthcare system, imagine pouring water from a faucet into a cup. Eventually, it just starts to overflow. That's what happens to the healthcare system. Because of the fact that so many people need to go into the hospital as a result of contracting the virus, and because the virus is growing exponentially, what happens is you go from a situation on the first day that you think you have a problem, you say, this is fine, we can handle all the cases in the hospital. But because it's doubling every 2 weeks. I'm sorry, it's doubling every 1 week. So every week, the number of cases doubles that you have when you have community spread. And after about 3 weeks of this happening, the hospital system runs out of room. Our hospital system is not elastic. In the US, you only have about 330,000 beds that are open at any time. So what eventually happens is you just run out of space in the hospital. And then when you run out of space in the hospital, people start dying in terrible conditions the way they are in Italy right now. So in Italy, you have something around deaths as a percentage of confirmed cases at 7%. Whereas we think that deaths as a percentage of confirmed cases, if you can treat everyone, should be around 1%. But because you can't treat everyone in the hospital because it's growing so fast, the healthcare system just can't respond to it. It just is unable to put enough people in beds on ventilators and give them nurses and protect them. And that's why you're seeing such a severe response to shut things down, because if you can delay at all, there's this concept of flattening the curve of pushing the peak of the pandemic into the future, if you can slow down the spread, even if we're all going to get it the way that you said, if you can slow down the rate at which we all get it, you can drastically decrease the odds of everyone needing to go into a hospital at once.
Mm-hmm.
So if everyone needs to go into the hospital at once, it's not just coronavirus cases that causes death. You have a broken ankle, need surgery on it? Sorry, everybody at the hospital has coronavirus. Can't go. You need open heart surgery? Sorry, can't go because all the doctors are treating coronavirus patients. We don't even have beds for them. And then the healthcare workers begin to get sick because it's so contagious. So if you just take, and the thing that's been frustrating in this country for a lot of people who have been watching this for a long time is that given the statistics that we have, given the numbers that we can see coming out of China, if you trust them, who knows, coming out of South Korea, coming out of Italy, coming out of Iran, is we know how it grows. And we know what you need to do to stop it. It's fairly obvious what's going to happen because we now have the data and we haven't done the things that we need to do. And the things that you need to do are really painful, right? They cause these second order effects like the economic and financial crisis that we're going to have. But the trade-off is, do you want to help? You can't really say, okay, we're just going to let it run free and allow people to die in the hospital hallways. So that's why I say it's been a good week in terms of people figuring out that these are the things that you need to do to slow the spread of the disease.
Mm-hmm. Yeah. And what about the healthcare costs? Like I actually, coming from Canada, it was quite a scary thing for me. The first time I got strep throat down here, I didn't know where to go. I didn't have a ton of extra money. I didn't have health insurance. And, now I've got some, but I don't know that whether or not it would cover, an overnight hospital stay could be in the thousands of dollars. And people were talking about coronavirus tests costing $3,000. Or I saw one tweet from Mike in Space said a teacher, a third grade teacher, I forget what state it was, went into the hospital wanting a test. They didn't give her the test, sent her home, and then sent her a bill for $10,000 for going in without even getting a test. I don't know if that's true. And then the copay, long story short, she only had to pay $75 of it, but that's what the overall bill to the system and the insurance companies was. So that's pretty, I think that's a prohibitive factor for a lot of people that don't have health insurance.
Yeah, you put your finger on two things that are really important, Sasha. The first is that the cost of doing this is another thing that we talked about before, is a class issue, because someone who is wealthy and understands what their options are from private health providers will likely have a better go of it than someone who just rolls into the emergency room and doesn't understand what they're going to do to get their coverage. And we've seen emerging horror stories about how much it costs people to get tested. So included in that fiscal package that Congress needs to get done, hopefully even now. I know that the president is scheduled to be giving a briefing at 3 p.m. I don't know if he's giving it right now, but hopefully it includes covering the cost of everyone getting tested, because people will then not want to go if they think they have to pay a lot for it because they can't afford it. And that's the opposite result of what we want. We want more people to get tested. And the first crime that we have committed in terms of trying to slow this outbreak in America is that we are unable to test enough. So if you look at what the playbook is for dealing with the viral crisis, is one, test early, test often, test everyone you can, and then those people that have been tested, isolate, quarantine, contact trace, test the people that have been in contact with them, isolate and quarantine the ones that test positive, right? That's what South Korea did very aggressively, very efficiently, and it looks like they're starting to bend the curve of the virus in South Korea. That's what theoretically China did. If you trust the numbers coming out of China, there's a lot of controversy over whether or not you can trust the numbers coming out of China. But if you can do those things, you have a chance at staving this thing off. Comes at a very high cost. And it's very difficult politically to achieve because you need to convince everyone. And you know how hard it is to convince people of something that they don't believe. You need to convince everyone that this is the right thing to do. And even now, I have a really difficult time convincing people that what is about to happen is going to be very dramatic and very bad for the health of many people. But what you need to do is do that testing early and often. And the problem we have in America, the tragic, sad, devastating story that we have in America is that right now we still can't test well. So we still don't know what the problem is. So we can't solve it.
Teddy, why do you think that is? I was kind of thinking about it yesterday, and I was wondering if it has something to do with not wanting to look like we didn't do a great job reacting to it, so keep our numbers low. So if we can't test and confirm that we have thousands more cases than what are showing, then Trump looks a little bit better. Do you think there's anything to that? Or why does South Korea able to test everyone coming off a plane and we can't?
Yeah, the reality is I don't know the answer. I've seen that story for sure. The reality is I don't know the answer. What we can say, based on the facts that we know for sure, is that if you were paying attention to this thing 2 months ago, when many people in Silicon Valley and San Francisco in particular were, then you knew that you needed to get the testing ramped up fast, and you needed to get the testing ready to go for as soon as this thing got here. And we failed to do that. It's an abject failure. It's very sad. It's going to cause a devastating loss of life. The reason we didn't do it is unclear to me. We know that the CDC, the Center for Disease Control in the United States, the federal agency that's responsible for handling these types of things, we know that they attempted to develop their own testing kit early in the process. They didn't want to use testing kits purchased from other countries. And we know that their first attempt to do that was a failure. It didn't work. So that's what we know. We don't really know much beyond the fact that it didn't work, and now we're playing catch up. So we're playing catch up. It's left us in a position where we're basically unable to do the first thing, which is try to contain and stop the spread. So it means that now we can't stop the spread. So now what we need to do is try to reduce the speed of the spread. And reducing the speed of the spread is what results in us canceling things like mass public gatherings in schools and social distancing measures in general.
Mm-hmm. Yeah, I'm scared. My mom is, we flew, like I mentioned, we flew from Florida, and she's 71. She's up in Toronto, but it's really unnerving. And then we saw, the Trump and Bernie and Joe are all in their 70s. So it's got to be scary for them as well, facing this and trying to ward it off.
Okay. I was just saying, politicians in particular, we'll see many of them contract it, and statistically, we will sadly and tragically see several of them die, because politicians are uniquely susceptible. One, they're typically old. Two, or older. They're an older demographic. There's many of them are in their 60s or 70s, which is the most dangerous group. Two, they typically travel a lot. Three, they're in large groups a lot, and four, they shake a lot of hands, and those are high risk activities. Prior to the crisis becoming so acute, I also would have joked that they typically don't understand how to do math well, because I think that one of the things that's interesting about this crisis is if you're willing to look at what the numbers are showing you, and you understand exponential growth, which is what this virus is doing, is growing exponentially, then you become very acutely aware of what the risks are. I think one of the reasons that Silicon Valley, San Francisco culture in general was so early in identifying this as a massive concern is because one way to think about Silicon Valley venture investors, early stage startup entrepreneurs, is that they're finely tuned calibrating machines that are always looking for exponential growth, right? Think about a social network. Think about startups that do well. what you're looking for is the term used to be viral growth. That term is going to be retired, but that's what they're looking for. So when they see it, they know it. And humans do not intuit exponential growth. It's something that I've been trying to explain to the people that I love that are older in my life, that I'm like you, I'm concerned about them because they're not taking it seriously enough oftentimes. Next week will not be a little bit worse. It will be twice as bad. And then the week after that will be twice as bad again. And I think that's the thing that humans don't like. Humans understand things that are linear. This is growing exponentially, and that's a different conversation. So that's something that I've been trying to talk with people about, because like you have your mom is in a demographic. My parents are in, and my in-laws are in the same demographic. So I share your concern.
Mm-hmm. And when you mentioned San Francisco too, there's such a huge homeless population there. I wonder, what will happen to all them if it just wipes through everyone, and they all get sick, and the hospitals probably are not going to take them ahead of someone that's that looks like they have a job and a health insurance. So
yeah, that would be tragic. It's another thing that people have raised with me. I don't know how the system will handle that. And I'm hopeful that now the types of things that we're doing, limiting people being in public and slowing, using that phrase, flattening the curve. I'm sure that you've seen the graph that shows the two different curves. If you can slow that spread and flatten that curve, you increase the odds of the medical system being able to deal with everything, being able to deal with all the sick people that contract the virus. And I'm hopeful that the things that we've started to do this week will allow us to slow what would be the worst of it.
Mm-hmm. And then back to what you had said about the treasuries earlier, that's a market I don't know as much about as I wish that I did. I saw Jill Carlson tweeted yesterday that her mother was trying to get cash out of an ATM, and she had to go to a lot of different ATMs and there was no money at them. And she pointed to the weakness in treasuries and saying that there is a potential that we could see a run on the banks. Can you walk us through that scenario, or the probabilities of it and what it would look like?
Yeah, I saw that tweet from Jill as well, and she said that was in the Massachusetts area, I think suburbs of Boston. One of the things that I've said in previous conversations is that the most important thing in financial markets is actually trust. And people forget that during the good times, but they remember it very clearly during panic and crisis times. And the reason that the most important thing in financial markets is trust is because our financial markets operate off of people giving money to someone else, banks giving money to other banks, and expecting to be able to get the money back when it's due back. And when that starts to unwind, when that trust starts to unravel, that's when we start to have truly acute panic-like situations that spills from the financial situation, from the financial markets into the streets and into the broader economy. And one of the reasons that people often overlook, particularly in the Bitcoin community, right? We have a number of people in the Bitcoin community who are mistrusting of central banks and federal governments. And I'm sympathetic to a lot of the arguments that they make. But in times like these, the Federal Reserve is the lender of last resort. They need to fill the role of the only entity that can be trusted, where you can go to them to get money and they'll give you money because they trust you to pay it back. They're like the source of trust. And when the way that you start to see that if it gets into the financial system, people stop to trust each other in a real human way, that the trust is gone, it manifests itself in people stopping to trust their banks. So going to the ATMs to get physical cash out of banks so that they don't have to trust that the bank is going to be able to give it to them when they want it. And that's where you see in real panics and financial crises like we had in 2008, like Greece had in what I believe was 2012, is people go to get their cash out of the bank because they don't trust that the bank can give it back to them. And when that happens, you have real panic physically in the streets, because as we all know from watching It's a Wonderful Life, like the money's not all in the bank at once. And that's why the first thing that you see, the first sign that something severe is happening in a market, is what we saw this week from the Federal Reserve, which is stepping in to first reduce rates, make money easier in the first instance, try to get more people to borrow. And then in the second instance, they stepped in yesterday to start buying treasury securities from banks. That is another way of getting more cash out into the system. So you try to pump liquidity into the system so that the banks have money, the banks will lend, they'll lend to each other. And that's how you see the central authorities try to keep the system moving, so that hopefully you don't have spillover from the financial markets into the economy, which can be a very negative feedback loop.
Mm-hmm. And they can just, do they need to buy it from the treasuries, or can they just print new money to fill the stimulus?
Yeah, so this is where we can start to get into that interesting conversation about the philosophies underlying Bitcoin, and why I think true believers in the underlying philosophies related to Bitcoin are still strong. What the Federal Reserve does when they do repo, which is what they did earlier this week, they call it repo, which is known as repurchase, which is really a short-term loan that's collateralized by treasuries, is, guess what? $1.5 trillion, $500 billion in 3 different operations, they call them, is invented out of thin air. It's like if me and you were the central bank, Sasha, we would have just written that number in a spreadsheet. And then we would have transferred the number in a spreadsheet to banks that held bonds and said, just let us hold your bonds for a little bit. And you can now have this $1.5 trillion worth of new US dollars. You can now have $500 billion worth of new cash that we've just invented. That's how money printing occurs in the modern society. So it doesn't come from anywhere. And the central banks are authorized to do this. But one of the things that we truly do not know is, how long can this go on for in this type of environment? Post-financial crisis in 2008, we've been on this longer than a decade now period of time where central banks had kept rates exceptionally low, unlike any other period of time throughout history. And they also played these financial engineering ways of getting more cash into the system, which have historically been called quantitative easing, or some people think repo, what they announced this week, is a form of quantitative easing, which is that the federal government issues treasury bonds, they get into the system, and then the Federal Reserve, which is responsible for the money supply, goes out and buys the treasuries from people in the market, thus printing new money. So you get your when you start to think about it, it's where is the money coming from? Because the federal government's borrowing money, but then the central bank ends up owning the obligation. And some people say, well, this is just something that can't go on forever. What can really hold value? We need a type we need a store of value that has a fixed supply that we can also transfer amongst each other, that nobody controls and can manipulate the supply distribution of. And that's what we should really base our wealth on top of. And it needs to be outside of government control. And that's Bitcoin. Does it work? Realistically, none of us know. It's 10 years old. How does it behave in a crisis? Well, we're getting a sneak peek at that right now. So far, it doesn't behave well. But my view on it is not that we know the answer because of the way that it's traded in the past week or two. It's more that, wow, the long-term theory got really fascinating this is the simulation that you were planning for if you thought you wanted a fixed supply asset that had its own monetary policy that couldn't be changed by anyone acting unilaterally. And I think that and I think people should separate. There's a real need for the US government and its institutions to intervene with what's happening in the market to help everyday Americans financially so that they could get out of this three-headed crisis all right, to help them from a public health perspective and to support the financial market so that it doesn't get worse for everyone. And I think it's okay to have that view on the one hand, and also continue to think that Bitcoin may be the next version of monetary policy that helps get off of this cycle of low interest rates and periodic crises tied to debt monetization.
Mm-hmm. Oh, thank you. That helped me understand it a little bit better. And hopefully everyone else too. Now, one other thing that ties into that if you can maybe try and explain. So last year when the yield curve went inverted, a lot of people were signaling that negative yield curve had also happened in 2006, right before the real estate, right before everything blew up with the Great Recession. And we're kind of pointing to this current negative yield curve that we saw last year as a precursor for what might be what's happening right now. So how does this yield curve, do you think that is the best leading indicator of economic hard times to come, or?
Yeah, glad you brought that up, Sasha. It's not clear to me precisely what that means, besides the fact that something weird has been happening with the treasury market in the last year, and something weird was happening in the short-term funding market in the last year before this occurred, before this coronavirus-inspired dislocation occurred. Something was up. We don't know exactly what, but if you think about it just logically, right? If someone is going to make you a loan, you should have to pay them back something if they're going to, a little bit if they're going to pay you back tomorrow. But if it's in 6 months, you should pay a little bit more. If it's in 10 years, a lot more. If it's in 30 years, well, you'd think even more than that, right? And when the yield curve inverts, and that's no longer the case, something's weird, right? Something is up. People are no longer buying those assets that have those yields attached to them for the reason that they would otherwise be if they were just making a decision about yield, about what's the right way to be compensated for holding this instrument. Mm-hmm. And while I don't know precisely what it meant or what it was signaling at the time, many people, as you said, were indicating that it was indicating a recession, economic recession. I'm not sure about that, but it does say to me that along with other things that were going on in the market at the time, such as there was another whole debate about the increased usage of repo, which we talked about at length earlier, but there's an increased spike in repo during 2019, a few different periods where the funding markets got pretty wacky. Short-term repo had to be dramatically increased. There were various explanations that were brought to the market. Some people bought them, other people didn't. So I think that we've been in a period of time with the financial system that people have been sort of wondering what's been happening for a while and questioning how things have been developing, and we haven't had a needle to kind of prick the bubble. There've been a lot of people have been shouting warnings for 10 years that we can't do this, and nothing has caused that yet. And there's a real chance that what has caused it to pop is this global new coronavirus. And I hope that's not the case. By the way, all the negative things I've said, for the record, I'm an optimistic person. I hope they're all wrong. I hope I'm wrong. I hope we stop the coronavirus in its tracks and we get it under control tomorrow. And I hope that the financial crisis and the economic recovery is a V-shape, but that's the type of thing that people who are critical have looked at for a while.
Mm-hmm. And then one more thing with the yields, I've seen, so when oil started tanking on Monday, I was looking at some charts and it looks like, and again, I used to have a general knowledge of the entire market when I was working in mutual funds, but since 2014, I spent 3 years in law school and now 3 years really narrow vision on Bitcoin. So, looking at the oil markets, I didn't know what was going on with them. And now I'm just trying to play catch up, but it looks like there's a ton of triple Bs bonds that are coming due that are about to get downgraded to double B, which means they're forced out of all, when you said like the hedge fund managers have to take risk off, well, they can't hold them if they're double Bs. So how does that play into everything as well?
Another dynamic that you're raising, Sasha, you think about all of the things that are happening in the markets right now. It's almost too much to throw into the simulation at once, right?
Yeah.
And as you know, oil is such an intertwined, complex geopolitical battle between the oil production states in the Middle East, Russia, the US here, that involves the dollar. And throwing that into the mix, it's really just another complication that unmoors the anchors that we have in the market that people rely on. And I'm sympathetic to the argument that consumers see lower prices at the pump, and that's a good thing, and I don't disagree with that. Everybody's happy to pay less in gas and have their gas bill go down. But the reality is that it makes things very difficult, for example, for energy companies, shale companies in the US now can't make money based on the price of oil, right? They used to have a way to make money, which was they could sell and they'd have money to service their debts. But now you think about what happens in something that's going to start happening in the airline and hotel industry very soon, is that they're just not going to make enough money to cover their debts. And they're going to start laying people off.
All the cruise ships are no longer purchasing either.
Cruise ships aren't purchasing. Airlines aren't purchasing. People are traveling less. And that's why I think you had the initial, a massive move down in the price of oil on Sunday night, which I should mention, like, all by itself, if nothing else happened in the markets this past week and there was no virus to speak of, a 30% decline in the price of crude oil, which happened on Sunday night, would be something that we'd be talking about for weeks, and it would be having major impacts and ripple effects throughout the market, and then the economy, and it's just one of many things that we're now dealing with. And I think you're right. So Saudi Arabia decides, effectively seeing what's happening to aggregate demand, probably, based on the fact that we're having such a sharp economic slowdown, we need to cut the cost of what we're willing to sell oil at in order to be able to continue selling enough. And it's a very aggressive move, right? Because if Saudi Arabia says, we'll sell oil cheaper than you will, they can put you out of business. And that's effectively what they've done, is they've made this move to sell oil cheaper that puts a strain on all other oil producing countries and companies. So it's a very challenging dynamic.
Yeah, agreed. And a little bit maybe geopolitical with it too, of, when you get it, I'll put my tinfoil hat on, but we have, Russia, not very many coronaviruses there. And anyway, I don't really want to say all the things that have gone through my head or all the conspiracy theories I've seen around it, but it, anyway, yeah. It's a weird time right now, and it's scary. And I personally got more scared yesterday seeing Bitcoin react the opposite of how I expected it to react. But hopefully, I don't know what the price is doing now, but hopefully it will I think Bitcoin will do the V where the rest of the economy does a kind of longer recovery. But
I'll be checking, as I'm sure you will, as soon as we get off. And I only have just another minute because I'm seeing it's 3:30 here on the East Coast. But
mhm.
I wanted to add your geopolitical thought. It's easy to try to stop yourself from thinking about those things. But I think that one of the things that was obvious to me in being amongst people who were trying to raise awareness about the coronavirus from an early stage is that it's very difficult socially to have a view that everybody else doesn't have. And I think people underrate just how hard it is to have a non-consensus view on anything. Like if you were 3 weeks ago telling people that we needed to close the NBA season and shut down schools, like they would have laughed you out of the building you were in.
Well, look at what Benton was, and everyone was so mad at him, saying, "What's this guy doing?" But then he sold all of his Bitcoin in his Atlantic Financial at 9,100 like on Monday or something. So
is that right? Yeah. So I think that there's such an incredible urge from the intolerant majority to shame people who have a view that is not consensus, that many people are pushed into just believing whatever everybody else believes. And I think that if you start to think about some of the knock-on effects of what's happening now, like China is out on their government ministers from the Chinese Communist Party are now out blaming the United States for the start of the crisis, speculating that the United States brought the virus initially to Wuhan, China, which is where it originated. Iran is joining in that chorus. I expect Russia will do the same thing soon. China is also now out shipping ventilators, masks, and medical equipment to Italy, supporting.
Oh, I lost your audio.
Oh, did you lose the audio?
I can hear you now. Yeah.
Pick back up?
Yeah.
Yeah, so you in other words, believe for sure that this is a geopolitical tool that China is going to use. China is going to use this as a type of propaganda to suggest that they're the leader of the world and they're helping pull the world out of this crisis, while the US is here, unable to even deal with our own problems. And the sick, sad thing about that is that there's a little bit of truth to how poorly we're dealing with the crisis thus far. And that's what really makes you feel unhappy and unsatisfied with the response that we've had so far. But I'm still optimistic that we can turn it around and do what I think Americans usually do in the end, which is the right thing, and turn it into our finest hour and a way to try to save lives and get things back on track.
Mm-hmm. Yeah, thank you, Teddy. I have all these questions to ask you about the SEC's response to Bitwise's ETF proposal, but it just feels like everything is pale in comparison to what's going on this week. And we didn't get to those questions, but you did such an amazing interview with FinTech Frank, I think, last week with the block. So if people want to know more about Bitwise and the ETF and the goings on, I highly recommend listening to that podcast as well. Yeah.
I had so much fun with Frank. The sad thing that I wasn't able to see you in person is, if you listened, I brought him a Italian delicacy.
Didn't have any of those meat. They sounded so good.
I was gonna bring a stick for you and your family, but yeah. I promise we'll do it again. We'll talk more about the ETF, which is what our business is and what we're focused on. But we'll have to find another time to do it, and we'll have a good time. Hopefully we'll do it in person, and hopefully I can bring you some Italian soupy from West Rhode Island.
Oh yeah, I would love to try that. My mouth was watering listening to you talk about it and making them. So. Mm-hmm.
All right, Sasha. Thank you for having me on again.
Oh, thank you so much for making the time and I think really shedding a lot of light on what's actually happening out there and how it's all so intermingled. So thank you, Teddy.
You're welcome. All best to you and your family as we get through the crisis. We we need to check in on each other and take care of the older people in our lives for sure.
Yes. Yeah. Thank you.
You're welcome. Bye. It's great to see you.
You too. Bye.